Okay, cool. Fine. So, hello everyone. Very good afternoon. Hope you are doing good. And myself, Vignesh. I'm a certified ERPNext consultant from FOSS ERP. Today, I'm just going to present about ERPNext asset management on ERPNext. Okay. Um, you know, the Frappe framework, right? ERPNext is built based on Frappe framework. So Frappe is nothing but it's a combination of framework plus application, and it's a true 100% open source platform. And so in last few years, Frappe ecosystem is growing very rapidly. We are just growing at 40% year on year, and we have a 20,000 plus active developer community, and we have a 18K plus GitHub stars, and uh, we have 180 plus channel partners across 50 countries. And so globally, 30,000 companies has trusted ERPNext, and these are all our premium customers. Okay. And there are most of the applications has been built on top of Frappe framework. And so one important thing is you should experience this Frappe Cloud. So if you are using Frappe Cloud, you can reduce your DevOps cost and all. And even though for India, compliance app is available for in, uh, in Frappe Cloud. So that you should experience this Frappe Cloud. And ERPNext is comprehensive, and it has lot of modules for any kind of a business. And it has finance and accounting, manufacturing module, sales and CRM, project management, procurement, and stock management. So these are the features on ERPNext. And it's a simple tool, but quite powerful. And it is available for API integration. We can connect ERPNext with any kind of third-party system with the API integration. And it's 100% mobile friendly. We have a role permission manager. So through that, we can manage the role permissions at a granular level. And we have a approved workflow. We can it will be we can control the any kind of document workflow and all, and we can easily customize the documents. And if there is any child or subsidiary companies, we can easily manage with ERPNext, and it is compatible with multi-currency, and we have a document version control and all. And so it's a most agile ERP on the planet. And Frappe framework, it's a low code platform. It's 100% open source, true open source platform, and which is built. ERPNext is just built on top of Python and JavaScript, and it is ready for integration, and it is scalable. This ERPNext can be scalable for any kind of a business. Okay. So, and FOSS ERP, FOSS ERP is a certified Frappe partner, and we are a team of 8 members. Past 3 years, we are successfully working with 16 plus clients globally. Mainly, our customers are based out of Europe and US. And recently, we had a successful uh, data migration and implementation from version 30 to version 15. And we have implemented some complicated manufacturing. There are some. Sorry. Can you able to see my screen?
Not really, Vignesh.
It's sitting and sorry, I can't able to share my screen.
What happened right now? It was visible.
I think it's sharing, not going down.
Ankita, are you there?
Yes, I'm there. Try to host it again, Vignesh. Yeah.
Can you able to see my screen now?
Yes.
Okay. So recently we just implemented one complicated manufacturing project, and so our team members have 4 members were certified. Okay, we just based out of Bangalore alone. Then you can reach out to our website here. Then so I will walk you through about ERPNext asset management. Okay. So, so basically the asset. So, what is an asset? So, if there is any kind of a component or machines or cash or any kind of a land, so those will be called as an asset. Okay. For me personal, for my personal asset would be some gold or bank balance or some of my bonds, stocks that will be considered as my asset. Okay. So in accounting, there is a the thing something like if there is something to be called an asset, it should not be consumed or converted into cash within a year. Okay. So in some of the companies, they will call it as an asset. If the asset value is more than $2,000, they will book it as an asset. So that item could not be consumed or converted into a cash within a year. Okay. So it should be lifetime should be something within a year. And the assets can be divided into two parts, like tangible and intangible assets. So tangible assets comes like cash, land, equipment, inventory, some of my company machineries and furnitures and stock assets and bonds. These are all my tangible assets. So in ERPNext chart of accounts, you can see some of current assets, fixed assets, stock assets, like that. Okay. Then there is a intangible assets, the land. So all everything will be depreciated over a period of time. Like inventory, machinery will be depreciated over a period of time, but the land won't be depreciated. Okay. So other thing is the intangible assets. For any company, they have some own patents and trademark, copyrights and goodwill, brand recognition, and some internet domain and customer list. So these are all the company's intangible assets. We can't see or physically see the intangible assets, but tangible assets we can see. We can see the tangible assets. And so why we should do this kind of depreciation and posting the something, create asset entry and everything. So because in finance and accounting, there is a lot of principle is there. And one of the important principle is the matching principle. Okay. We should obey this principle to get a clean and clear balance sheet and P&L. Okay. So it will, if we are following the matching principle, so it was saying like we should recognize the income and expenses on the same accounting period. So that's what this principle is denotes. For example, if there is if you are receiving some amount of revenue from my customer, I should I should book it as a same accounting period. And if there is any depreciation on the on this financial year or this quarter or this month, I should book it on the same accounting period. So then only I can get the clear P&L. So otherwise, if some of the assets were not depreciated on April month, on end of April month, I won't get a clear P&L. Okay, it will give some higher profits. So from the management point of view, we should book the income and expense and accrued revenues and expenses should be booked on a same accounting period. And likewise, there is a prepaid expenses or accrued expense like deferred things. We should book it properly. And if there is any cost allocation, we should book a clear journal entry to get a clean financial reports. And the asset will be depreciated in ERPNext in 4 different methods. So one is the straight line method. So straight line method is nothing but, for example, if I'm having an asset of some mission that value is around 12,000 rupees, but it will be depreciated over a period. That asset lifetime would be only 12 years. So if I'm depreciating that every year, 1,000 rupees will be depreciated. End of 12th year, that asset value will be going to be 0. Okay. So that is what the straight line method. Okay. But if I'm using the double declining method, so there is some formula. So beginning book value means what is the beginning value of an asset? 12,000 multiplied by 2 divided by the useful life is 12 years. So like that, this is the formula. So if I am using this double declining balance method, so the asset will be depreciated very soon, not in 12 years. It will be depreciated in only few years alone. And there is a written down value. Here we have to update some percentage. In first year, how much the depreciation will be required. For example, any car or mobile phone, if you are purchasing on 1st of January, and within a year alone, there is a 30% or 40% amount will be depreciated. So something higher depreciation will be happening in initial years. And the final one is the manual method. So we can manually update the depreciation and these scheduled dates and all. And if some assets were depreciated in ERPNext, and if with straight line depreciation method, it will be like gradually we are depreciating the product cost. And if it is a double declining, so you can see the graph like this. And there is a written down value means you can see the initial year, there is a lot of product value has been depreciated. And then I will walk you through about the asset management. So after booking an asset, after over a period of time, it will going to be depreciated. But in real time, we should repair the asset, and we should split the asset, and we might sell the asset, and we should scrap the asset. If it is not going to be further useful, we will scrap the asset and we will transfer the asset from one place to another place. For example, if I'm having a gold, I will adjust the value of the gold based on the market value. Okay, so that time I have to adjust the value of an asset. Then you can see the asset management options here. Then so every time I'm posting a journal entry for asset depreciation, system will automatically post this entry. So that time there is only two accounts were involved. That is, one is the accumulated depreciation, another one is the depreciation account. So accumulated depreciation is an asset account. Whenever for the first year, for example, the asset value is around 12 lakh rupees. For the first year, there is a 94,000 will be depreciated. Okay, so 94,000 will be decreased from this asset account. This is a fixed asset account. In chart of accounts, you can see here under fixed asset, under fixed asset group, 94,000 will be reduced. That means creditor means this asset value is reduced around 94,000, and that will be the counter booking is the depreciation account. Depreciation is an expense account. Whenever the expense is debited, it will be, we are just incurring some loss. So it will be affect our P&L. This loss will be added in our P&L so that we can see the clear profit and loss. And so for Frappe, you can just scan this QR code to get the Frappe websites and this kind of documentation and all. And for FOSS ERP, you can check this these websites. So let me walk you through about okay. Cool. So let me create an item. So you know how to create an item on ERPNext. So just go to the stock module and there is an item. Just click new item. Okay. So just update the item code, item name, and map it to the relevant item group, and enable this fixed asset. And if you enable this auto create an assets and purchase, the asset will be automatically created in a draft status. Okay. Then if you click the create grouped asset, if you are receiving 10 assets, so those 10 assets will be create only one asset. Will be depreciated in a group basis. Something like if you are receiving 10 assets, it will be grouped as one asset. Okay, that's what we are just grouping the asset, and it should be mapped to the relevant asset category. For example, if you are receiving some system or computer equipments, we should select the relevant asset category. And here you have to know something like if you are buying some machinery, you have to choose this asset category. Okay, so So we should update the relevant finance book, update the depreciation method, and what is the total number of depreciation? Which means, for example, if you are buying some machinery, so that machinery lifetime would be 10 years. So that's why everything you should update in a month basis. That's why I just updated 120 months. And frequency of depreciation in month, in the sense, so every month I would like to post a depreciation entry. That's why I just updated one. If you want to update the depreciation only once in a year, you should update 12 here. Once after every 12 months only the depreciation will be posted if you are updating 12 here. And after depreciation, what is the final salvage value? You can update these kind of values here. Okay. Then if you are managing multiple company, you should update the relevant company here, and you should choose the what is the fixed asset account, and these machineries will comes under plant and machineries, and what is the accumulated depreciation account, and what is the expense account. Okay, so whenever the depreciation were posted, the so already I have shown one journal entry. So the accumulated depreciation will be credited and depreciation expense account will be debited. So then you should choose the relevant asset category and select the naming series and update some basic details here. Then I am saving this. Mhm. So then I am going to purchase some assets. I'm just creating a purchase receipt. Huh? So you should update the asset location here. Now you can see here, the asset is created and the draft status, but since we have enabled the create grouped asset, okay. So these assets were grouped. Okay, you can see here the asset quantity which is mentioned as 10. Okay. The system has automatically grouped this assets. Okay. So let me create a depreciation. Let me post a depreciation. So the asset is created in draft status, and just assume we just received this asset on January month, and just enable this calculate depreciation. And so based on the asset category, the depreciation method will be updated automatically here. And so I'm just configuring like say every 31st, every end of the month, the asset depreciation will be posted. So I would like to start the depreciation from 31st of January. Since we have assumed like 1st of January alone, we have received the asset. Okay. So something like, so I just purchased this asset on 23rd. That's right. Let me create the one more. So let's assume I'm just creating a purchase receipt on 1st of January. So the asset is created in the draft status. So available for use date is 1st of January. So the asset depreciation deal is created. And, we'll be submitting this. Okay. So the asset depreciation is created. The asset value is 1,20,000. Every month, I would like to book a depreciation. That's why every month end, the asset depreciation were posted. And end of the 12th month, the whole asset, the product value has been consumed. So totally, we just depreciated 1,20,000. Each month, 10,000 were depreciated. Okay. So I think we can ask like in January, February, March, there are three journal entry would be posted because I just posted a backdated entry. Okay. So the system will run a background job, I think end of the day. So in ERPNext, we have a scheduled job type. So I would like to execute this. So once I execute this command, system will automatically book a journal entry. Okay. You can find this on scheduled job type on depreciation ID. Okay. So the execution was completed. So let me refresh this. So, cool. You can see here the three journal entry is posted because I just posted a backdated entry for January, February, March. These three journal entry were posted. Okay. So, but so what's happening here? Um, like accumulated depreciation, which is credited around 10,000 rupees because the asset is depreciated only for 10,000 rupees. And the counter account is the balancing account is depreciation system assets. Since we are we are expensing of this 10,000. That's why. So let me in chart of accounts, you can see here. That fixed assets. You can see here, I just created some separate account for our understanding. Under system assets, 1,20,000 which is debited because we just purchased the asset. That's why. And in expense, depreciation system assets. Yeah, I should select this finance book. That's why. So these asset entries were booked under this finance book. That's why. Um, you can see here this 10,000 has been depreciated on 31st of January. And see here this ID. You can find this here because Why earlier it is not available? Because I have posted this depreciation under this finance book. Okay. Maybe some companies using posting the depreciation under particular finance book for the tax savings for an income tax audit things. They were posting the depreciation under multiple finance book in some companies. Okay. So in general ledger, you have to specify the finance book to get the relevant depreciations. Okay, that's right. Um, then I'm just creating one more purchase receipt. I have just added some data here. For example, I'm just purchasing some laptops, three different laptops, but three items were configured with different asset category. So already I have created these asset items. You know how to create an asset item, you know. So I just added some items, and I have enabled this fixed asset and auto create assets and asset category and all. I just added some image, you know. So, but I have configured with some different asset category: straight line, written down, and double declining method. Okay. So I'm just purchasing on 1st of January. Okay. So, you know, whenever I'm submitting this, these five assets were created, but in draft status. Okay. So already we have, how the straight line depreciation will work. So let's move on to the next one. So, there is an asset. The asset name is this laptop I purchased at the rate of 12,000. So I'm just posting the depreciation. I'm just updating the available per use date and enabling the depreciation and just posting the depreciation in January. So one thing you have to know, um, so that is in written down value method, you have to update the rate of depreciation. So in first year, how much in first and over the period of time, how much every year, how much the depreciation should happen, and you have to update the frequency of depreciation. Okay. So I just updated the frequency of depreciation as well. So every year the asset will be depreciated. Okay. So this is what you have. In this way, you can configure this asset category. So finally, I'm just submitting this one. Okay. So you know the asset is created. Let me execute this again so that three journal entry will be posted for the previous months. Okay. So only one entry because here we are posting the depreciation entry once in a year. Okay. For 2025, it is posted. You know how we are getting we are getting 407 because you know 12,000 okay. Every year it's a 48,000 will be depreciated. Sorry, 4,800 will be depreciated. For this month, it's around only 1 month. That's why something it's a 31 days. Okay, so that's why it's 407 only depreciated because we were used this asset from 1st of January to 31st of January. So we were only 407 will be depreciated. So here I just calculated for something 30 days. So it is 31 days. So the depreciation will be 407. and the remaining years, nearly it will be depreciating 4,800 like that. And so every next consequent years, the system will, if it is 12,000, it's the beginning value. System will reduce that, you know, 12,000 minus 7. Okay. Um, yeah, 4637.2. Okay. So the system will, initial value, how much is already depreciated is 407, and it will be another, and we are just multiplying by 0.4 because 40% is the written down value. So we instructed the system to depreciate this particular product 40% every year. So like that. So it will be more like this. Okay, this is a written down value method. So here you can see in initial year itself, we can see lot of depreciation. And then we can move on to the double declining method. Okay. So in double declining method, enabling this one. The other depreciation is created. Just submitting this. Okay. So I have updated the image on asset item level alone. But when I save and submitting this asset, so the image will be carried forward. Okay. Now I'm just executing this job again. Let me refresh this to post a backdated GV. You can see here. Here also I'm just updated 12 months. That's why every once in a year the journal entry has been posted. It is simply working based on a formula basis. Okay. So already I have shown what is the formula for the depreciation. You can find this here. So based on this formula, uh, this asset depreciation were posted. Then let's move on to the next topic, like so asset management. There is an asset. First of all, I'm just transferring the asset from one place to another place. I'm just transferring the asset from one location to another location. So simple one. So before transferring the asset, and just look at the location. It is location is updated as Mumbai, and just I need to update this as Bangalore. So asset location has been updated here. Then so I would like to repair the asset, or I would like to so for example, this asset where something have some issues on 22nd of April. So something there is some consultancy or some consulting fees or some repair work has been done. We might we should raise an invoice to update the value. So some repair work. Then just save it and the completion date and update the asset status. And there is some capitalized repair cost. For example, the asset value is around only 12,000. But after repairing this asset, the asset lifetime might be increased. So earlier, the asset lifetime is only 12 years. Okay. But after repairing for 5,000, we have invested another 5,000 for this particular asset. Maybe the asset lifetime will be increased for another 3 years. Okay. So already the initial lifetime is 12 years. After repairing, there is another 3 years will be added. Increase in lifetime for another 36 months. If there is any stocks were consumed on these repair work, we can add these things. Okay. So you should know, just look at this asset depreciation. You can see only 13 line items there. Okay. It will be finally, it will be completely depreciated on 1st of 2037 and next 12 years. But after repairing this, uh, something its lifetime will be increased for another 3 years. So just save and submit. You can just see what's happening here on system assets. On fixed assets, something is debited. We spent 5,000 rupees that will be added in our fixed assets. And cost of goods sold is COGS is affected as credits. Uh, Cost of goods sold is credited. Okay. So let me refresh this. You can see here, earlier it is only 2037, but after repairing, that asset's useful life is increased for another 3 years till 2040. Okay. So then finally, I'm just adjusting the asset value. Okay, this current asset value is 16,831. I'm just adjusting this value, something as per market value. It's not 16,000. This asset value will be 20,000. Okay. I'm just adjusting the asset value. Something, what is it? I'm just updating difference account as something cash. Just look at the journal entry. So I just increase the asset value. Okay. So asset value from 60,000 to 20,000. So the cash is credited, system assets is increased for another 3,169 because I just increased the asset value further 3,169. So system assets, fixed asset value is debited, which means our asset value has been increased because I just increased the asset value from 16,000 to 20,000. I just increased only 3,169. So the uh, so there is some difference account because it's a double entry system. So the balancing account, I have chosen the cash account. So the cash is credited. Okay. So we can choose any kind of difference account here. So then we have transferred so split. Okay. And so here we have only one quantity. Finally, I would like to scrap this asset. Okay. Scrap means the this asset value, whole asset value will be expensed off. booked as a loss. Okay. When I'm updating when I'm doing the scrapping entry, there is some journal entry will be created. You can see the journal entry. You know, system assets is credited, which means my asset value, I just purchased this asset for 12,000. That is reduced from my fixed asset account. And accumulated depreciation, actually, accumulated depreciation will be credited. That's why system is booked under debit side. But that's why accumulated depreciation is usually on the credit side. But system is booked under debit side. That's why it is mentioned as negative. Okay. So usually it will be on credit side. And finally, the whole amount, 12,000 plus 7,000 will be expensed off. Okay. So, earlier I just purchased for 12,000. Further, some repair work and something, I have increased the asset value for further 3,000 and all. That as of now, the total asset value is 19,401. But the total, due to my asset scrapping, asset disposal, the total amount will be expensed off, which is booked as a loss. Okay. So if you look at the journal entry, GL entries, you can see here gain or loss, which is debited, which means this amount will be expensed off. This is my loss. This 19,000 will be reflect on my P&L on loss. Okay. So if I have a profit of 50,000, this 19,000 will be reduced on 15,000. For example, if I have an income of profit of 50,000 for now, after booking this asset disposal, 19,000 will be removed from my uh, assets and it will be expensed off. So my real profit is nearly 30,000 only. So that's why we were in system as the accounting principles were insisting us we should book a depreciation and asset disposal, this kind of transaction immediately in our books. Then only we can see the real profit. Otherwise, if I'm not booking this journal entry, still my P&L will show we have a profit of 50,000. After booking this journal entry, we have a real profit of only 30,000 because 20,000 were expensed off. Okay, so then you can see here. There is a few asset management. So for example, here I have asset quantity of 10 because since it's a grouped asset, so I'm just splitting this asset. I'm just splitting this asset like 5. Asset quantity is 5. You can see here 2 entries were updated. Um, this first one, asset 202 has asset 202 has 5 quantity and asset 218 has another 5 quantity. Okay. So earlier it's a grouped asset. We have a 10 quantity of this BNC mission, but I just splitted those assets into 2 entries. Okay. So then we can split, adjust the values. Finally, I would like to sell this asset. When I click sell, it will be redirected to this sales invoice page. I'm just selling as 5 quantity, each at 15,000. Okay. Just look at the general ledger entries. So you know the asset value, the accumulated depreciation. We have five assets. Each value is around 12,000. So five assets, total worth is 60,000. And so you know there is no tax. Just ignore that. And the accumulated depreciation, um, which is uh, which is debited, and there is a if there is any difference because our asset value is something, and we just sold it for higher value. That's why we have some profit. Okay, there is a gain of 33,000. You can update. You can see the status. Somewhere the asset were sold or disposed. You can check the status here. And you know, there is something called asset maintenance. So already I have configured some asset maintenance here. So we have to select the maintenance manager. You have to select the relevant user, tag the company, and just build a team. Like what is the maintenance role? Based on this, the to-do list will be allocated for these users. We can configure the asset maintenance like this. We have to select the um, relevant asset and asset category. It will be fetched automatically. Um, so we have to select the maintenance status. So what is the you have to select the what is the uh, on which period, like weekly or monthly. You have to select the schedule like this, and you can assign these tasks to the relevant users. These users you can see only the maintenance users based on this maintenance team alone. Okay, system will automatically pick the next due date, and every weekly and monthly, half yearly, in this time span, system will create a to do and assign it to the relevant users. Okay, so system this user is already used it, right? So you can see here there is a three planned activity. These are the planned maintenance. So system will automatically assign this to do to the relevant user. If I'm the user, I have to check this and I have to update the status. When I have completed this one, what is the status? I have to update the status here. So which is completed. If that's like this, system will create a to-do list every week. If I selected the time span as daily, so every day the system will create a maintenance task or to do for the particular user, and it will be allocated to the relevant user. They need to go and complete these tasks. Okay, so every week and monthly, these tasks to-do list will be created and automatically assigned to the relevant users. So in this way, we can easily maintain the assets. And for example, if you want to capitalize the asset, so asset capitalization is nothing but something. For example, if you are purchasing an asset, okay. For example, if you are purchasing some computer peripherals like CPU or keyboard, mouse, and something monitor, everything. Okay. So if we are purchasing it separately, then we are combining into one asset then it should be depreciated. And for example, if I'm purchasing a industry turbine, so the turbine blades, shaft, and generator and turbine housing, we are receiving on different timeline. Okay, so the first part will be received on January, second February, third is on April. So likewise, we are getting these assets on different time frame. We have to create an asset, and finally we have to capitalize the asset into one asset. We have to create a turbine as a final asset, and we have to combine everything and create a new asset. So I'm just checking some added some capitalized asset for our understanding. In this place you can update turbine or something that combination of asset. Okay. So I'm just consuming two assets and creating a one asset. Okay, I'm just capitalizing these assets. So these asset value, combining these assets, creating a one new asset. We have to create a new. Simply, you have to create a new asset item. So we should enable this fixed asset, and these are the basic things we know. So I will show you one. Already I have capitalized one asset. I will show you that one. Okay. So you have to select the you have to consume some assets, and you just select the target asset item. So here the new asset has been created. Um, so this is the capitalized asset, which is updated as a in draft status. This is a new asset. We can start depreciating from here. Uh, you can see the accounting entries here. So the system assets, which is um, debited of 12,000. So we just combined the two assets and created a new asset. So the accumulated depreciation, it's only for only 1125. Okay. So you can see the new capitalized asset. Is a target asset. So I'm just imagine we just combined the turbine parts and created a new turbine, and so we are just depreciating the whole turbine. Okay, finally. So I'm just calculating the depreciation. Uh, Okay. So finally, we just taken some turbine parts and just combined and capitalized into a new asset. And finally, we just depreciated the capitalized asset. That's it. Okay. And so after the assets, there are some insightful reports were available for in asset. You can see the fixed asset ledger. Here you can see what is the asset, what is the depreciation status, what is the available date, what is the gross purchase value, how much it has been depreciated, what is the value, where is the location. You can find all the data in the fixed asset ledger. And there is one more thing called asset depreciation ledger. So whenever the asset depreciation were posted, the JV is posted, system is updating here also. So you can see the asset depreciation entries here. Okay. So I think this thing. And one thing you have to know in asset category, you can find capital work in progress. Whenever we are constructing a new plant or a building, so that time we should choose the asset category as capital work in progress. So which means, for example, if you are building a new power plant or any buildings, so that time we used to receive lot of materials and goods and steel and all. So that time we have to book those assets under capital work in progress. Okay. So that's called the CV. That's it. If you have any questions, you please.
Thanks, Vignesh. I think there were many useful takeaways on asset management that you provided, and the depreciation types and asset maintenance and capitalization. We can definitely go ahead and start taking up questions. So anyone having any questions, you can just shoot it in the comments or can unmute and speak. Mahesh, yes, you will get the recordings right after the webinar is ended. Jillian Fontanella is asking, is there a way to encode and monitor serial numbers of asset for version 14?
So after serial number, um, okay. So each asset will have some unique asset ID alone. Okay, we can manage with that.
Nofil is asking, what is a finance book?
The finance book, I will tell you. So the finance book is nothing but the company has, multiple finance book. For example, for our, for the tax regulation and depreciation, based on the depreciation method and some stock first in, first out and lost in, first out, something like, you know, um, it's simply a company's book. Okay. So whenever we are creating a depreciation, I used to say like there are different depreciation method is there. Whenever we are depreciating an asset on different depreciation method, so our loss will be optimized. Okay. So if I'm, for example, if I have two finance book, okay, finance book A, finance book B. So finance book A, I'm using straight line method, but finance book B, I'm just using some double declining method. Okay. End of the year, double declining finance book, which shows heavy loss because in double declining method, we are just depreciating 40% of the product value in the first year itself. But in the straight line method, this first finance book, we are just using the straight line method. The first year, only 10% of the product value will be depreciated. So if I'm choosing um, straight line method finance book, I can see 90 rupees as a profit. But if I'm choosing the double declining depreciation methods finance book, I can see the profit is only 60 rupees. Okay. So in this manner, this is one case. Through depreciation method, we can through depreciation methods we can differentiate the finance book. And one more thing, that stock transfer, something mm, stock valuation method like first in first out, lost in first out, and moving average. If you are choosing some different different things on stock settings, that will also affect our finance book. Okay, there is some tax system, some accounting principle. Sorry, the globally there is a GAP and GWAP, and there is one more accounting rule is that. So, okay, so it depends on that. The finance book will be created. That's it.
I hope that
Thank you.
answers your question, Nofil. We have another question by Ganesh Krishnan. He is asking, well, this solution helps business manage everything in one place like sales, purchase, inventory, account, HR, and more in a single system. Am I right?
Yeah, yeah, yeah. So you can see here like in ERPNext, mm, a comprehensive application. You can manage the leads on CRM. You can create a quotation, create a sales order, and there is a selling module. There you can create a sales invoice, and then there is a stock module. You can create a delivery note, and on accounting module, we can create a payment entry and do some bank reconciliation, um, create a journal entries and all. Okay. So then we have a buying module. So create a purchase order, request for the quotation, and we can get the supplier quotation and issue the purchase order for L1 supplier, and we can create a material request, and we can create a GRN purchase receipt, and we have some insightful reports, purchase analytics, and purchase order analysis, purchase order trends, procurement tracker, and we have a stock module to manage all of our assets. We can check the stock balance and stock reports. We can manage the items and create a group. And special thing we have is something we have an inventory dimension. So we can manage multiple. We can manage all the stock transaction with a management point of view. We have an inventory dimension, accounting dimension, which help us to manage all the finance and stock transaction from on a different level. Okay, which helps to analyze those transactions in a different level.
Yes, so Salva Ganesh, to answer your question, just like Vignesh said, you can handle all your sales, purchase, inventory, accounting, HR, and everything in a single system.
Yeah.
Moving on to Rajat, he's asking where to add the SL number of the asset.
Please come again, please.
Where to add the SL number of the asset.
Which number?
SL, serial number.
So the for assets, for every asset, we are just creating an individual asset ID. Okay, so it is not mandatory to create a serial number. Um, for assets, we can actually we could not able to create a serial number. Okay, so usually the each asset will be received and depreciated mostly individually, so that this asset ID will help. Otherwise, we can something we can add a some custom field and create a tag the serial number and batch number on assets. So here we can add some custom field and create a serial number and batch number. So it will be helpful. So mostly unless or otherwise it's not a grouped asset. For every individual asset, we are just creating asset ID. So I think which helps. Instead of serial number, we can use the asset ID.
Right. Jillian is asking, is there a feature that we can print asset tags using the systems?
The asset tag and all, we can use one specific. There is some print format for printing the tag from ERPNext. So I will let you know. There are some printers. I will be we already done something. We can just print the asset ID and asset name like a bill tag. Okay, like a bill tag. We can print that. I will let you know. There is some print format which is available. Um,
So, Vignesh, you might just drop in your email ID so that people can reach out to you with their queries.
yeah, yeah.
And I've also mentioned a link for feedback just in case anyone has any any comments or questions can fill out that form and we'll be happy to assist. I do not see more questions coming in the chat. If anyone has any questions still, can drop in, or you can directly unmute and speak. So I don't think there are any more questions. Thank you so much, anyone, for joining this session. I think it was one of the wonderful and useful sessions in terms of asset management. And thank you, Vignesh, for taking this a good 1.5 hour session and helping us move around asset management. Any final words or thoughts you have, or how do you want people to reach out to you?
Yeah, sure.
Okay.
Thank you.
Thank you so much. Thank you everyone for joining. Please fill out the feedback form in case you have any thoughts and comments.